Hey everyone, welcome back to Corporate Decoder, the place where we peel back the curtains and find out what companies are really up to. Today, we're diving into a big one from Capital One Financial Corporation, and let's just say they've got some interesting numbers to report. Before we get into it, if you love getting these clear, no-nonsense breakdowns of SEC filings, make sure you hit that subscribe button, and hey, we've got a killer Discord community where we talk all things finance. Link is in the description below. So Capital One, you know them, the credit card giant. They've just dropped their latest report, and it is all about their financial results for the fourth quarter and the full year of 2025. This isn't just some dry update, it's a snapshot of how they're doing in a world that's always changing, especially in the financial sector. We're going to cut through the jargon and focus on what really matters for investors and anyone curious about the health of a major bank. We're looking at a Form 8, which is essentially a report companies file for major events. In this case, it's all about announcing their financial performance. Think of it as their quarterly performance review, but for everyone to see. This report is coming to us from Delaware, a common place for big companies to incorporate. You'll see a lot of familiar names registered there. They're incorporated in Delaware, and that's their home base for legal purposes. Their main headquarters are located in McLean, Virginia. That is where the decisions are made. Now, let's talk about what's actually being traded on the stock market. Most people probably know Capital One for its common stock, traded under the ticker symbol CORP on the New York Stock Exchange. It's the bread and butter for many investors. But Capital One also has a more complex structure with different types of preferred stock. They have several series of preferred stock, like Series I, J, K, L, and N. These are essentially different classes of ownership that often come with different dividend rates and other conditions. For example, the depository shares, each representing a 1/40th interest in a share of fixed rate, non-cumulative perpetual preferred stock. Series I have their own tickers like COFPRE. These are important for understanding the full financial picture and how everything fits together. They also have notes out there, like their 1.650% senior notes due in 2029, traded under COF29. This tells us about their debt structure and how they're financing their operations. The core of this report, the part we're really interested in, is how they did financially. On the 22nd of January 2026, Capital One released their numbers for the fourth quarter, ending the 31st of December 2025. This is where we get to see the real results. They've attached their press release and a financial supplement which basically breaks down all the nitty-gritty from their earnings. These are the documents that tell the story of their performance. We're going to focus on the highlights from that financial supplement. This is where we find the numbers that tell us if Capital One is growing, shrinking, or just treading water. Now, while the filing itself focuses on the reporting, the real juice is in the attached exhibits, the press release, and the financial supplement. These are what give us the actual numbers. We're looking at the results for the fourth quarter that ended on the 31st of December, 2025. They also hold these conference calls to discuss the results. Think of it as the company's leadership explaining the numbers and answering questions from analysts. It's another layer of understanding, but for us today, we're focused on reading the numbers ourselves. Let's pivot to what these numbers actually mean. You'll often see terms like non-GAAP financial measures. This just means they're presenting figures that aren't strictly in line with the standard accounting rules. Companies do this to highlight what they believe are the most important performance indicators, but it's important to understand why they're deviating from the norm. They're essentially giving you their spin on the results. So what did the numbers reveal for Capital One in late 2025? It's a mixed bag really. We saw improvements in some areas, but also some headwinds. Their revenue stream is generally holding up, which is good, but the cost of doing business is also a factor. When we look at their results, we see that their net interest income, which is essentially the profit they make from lending money, saw some changes. It's not just about the total amount, but also how that amount is growing or shrinking compared to previous periods. The provision for credit losses is another key figure. This is basically the money they set aside to cover loans that might go bad. An increase here usually signals that they're anticipating more defaults, which is a sign of concern about the overall economy or their specific loan portfolio. A decrease, on the other hand, could mean they're more confident about borrowers' ability to repay, or perhaps they're just being more aggressive with their lending. What's particularly interesting is how Capital One is navigating the current economic climate, with interest rates potentially stabilizing or even changing. Their strategy around deposits and lending becomes really critical. Are they attracting new customers? How are they managing their existing customer base? This report is signed off by Timothy P. Golden, their SVP and Chief Accounting Officer. This signifies that the company stands behind these numbers. Now, let's put on our investor hats and look at the bigger picture. Capital One is in a highly competitive space. They're up against other big banks and financial institutions, all vying for market share. Their strength has traditionally been in credit cards, a sector that can be very profitable, but also carries significant risk, especially during economic downturns. The company's ability to manage risk effectively while still growing its customer base is paramount. One of the biggest risks for any financial institution like Capital One is credit risk. This is the risk that borrowers won't repay their loans. In late 2025, as the economic landscape continued to evolve, we'd be looking very closely at how their delinquency rates and charge-offs are trending. Are more people falling behind on payments? Are they having to write off more bad debt? These are crucial indicators of underlying financial health. Another factor is the regulatory environment. Banks are heavily regulated, and changes in regulations can significantly impact their operations and profitability. While this particular filing is focused on financial results, we always have to keep one eye on the regulatory landscape. Looking ahead, Capital One seems to be pushing forward with its digital transformation. This is a huge trend across the banking industry where companies are investing heavily in technology to improve customer experience and streamline operations. Success here will depend on their ability to innovate and adapt to changing consumer preferences. In conclusion, Capital One's late 2025 report paints a picture of a company navigating a complex financial environment. While their core business remains strong, there are always underlying risks, particularly around credit quality and economic uncertainty. Their strategy to balance growth with risk management will be key to their long-term success. They seem to be making calculated moves. But the financial world is always unpredictable. Alright, that is our breakdown of Capital One's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.